Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Hal here. Hope you guys are doing well today. In this video, I want to do a bit of a follow-up from the videos that I've been doing in the past, probably month now. And I've been saying for probably for the last few weeks, probably 2 months, at least for the last few weeks, saying with the mining stocks, you know, don't be looking to get into now. Wait for a bit of a pullback. Wait for a bit of a dip. You know what I mean? And we just never know what's going to happen day by day by day. But I want to show you that yesterday I shared with the video, and I said mining stocks are starting to roll over here. And I got a lot of flack for it. Like, oh, John, you don't know what you're talking about, and all that sort of stuff. So I want to come on and do a bit of a follow-up through on my views on the market with the mining stocks, but also just to share with you some things that it's important for you when you're looking at the markets, and mistakes that I make from time to time, and they do come up every now and then. That when it comes down to actually just getting ahead in these markets. So the first thing I want to quickly just touch on the whole thing about getting ahead in the markets first. Then I'll get into the mining stocks and silver and gold and stuff like that. The thing is, guys, is that we never know exactly what's going to happen, and the best thing we can do, right, to have some sort of probability, no certainties, is just to continue to read what the market's telling us, right? So when I came out yesterday, I said the mining stocks are rolling over. That wasn't me saying that. It was the market, right? The market was starting to roll over here. And as you can see, right, on the GDX, from the high down to where we are right now, you know, we are down close to 13% from the high. And it looks like right now from this head and shoulder formation here, we're probably likely to head down towards around about the $29 level on this short-term basis on GDX. Now, this is on a short-term basis, guys. If you guys are short-term traders, then yeah, this applies to you. But if you're a long-term buy and hold, like you don't care what happens this week, or you care about what happens for the next 2 years, then this doesn't apply to you. But if you have a view of the next 2 years, but you freak out if the market has a pullback to 29, you are so incongruent with the way that you're looking at these markets, because you have to expect and accept that we're going to get pullbacks and swings and all that sort of stuff, right? So as you can see here, right, look at this here. Markets ran up, made a little high, came down, ran up, made a high, came down, made a lower low, came up, made a lower high, and now we're actually breaking over as well too. Now, someone actually said to me, someone actually said on my last YouTube video, wasn't this the same pattern that you said on the S&P 500, but then we blasted off? And it's very similar, right? It's a very, very, very similar pattern, but we didn't actually get the lower high, right? So what I mean by that is if I go to the S&P 500, let me go back to the, I'm going to go back to the, actually no, the Dow Jones, sorry. Let's go to the Dow Jones, right? So I'm going to go to the Dow Jones. Okay, so look what happened here. So we actually had, this was on the hourly charts here, by the way. So we had this low, we had this lower high, and we had this lower low through here, right? So the market ran up through here. So what would we need to see to confirm that this is probably going to continue down? What? A what? Say it with me. A lower high. Did we get a lower high here? No. What happened? We actually ran up and made a what? A higher high. What does that mean? The trend has changed, right? We didn't get a lower high here. Notice that? So we ran up, made a low, made a lower high, came down, made a lower low. Did we get a lower high? No. So if you're watching this market and you were short here, this is the time to say, you know what? The market is market's not going down. I need to be out. So no, this is not the same pattern, right? That's why we always look for the confirmation of what the market's telling us. We make a lower low. We need the lower high to come in, and then we're likely to see the fall through, right? So when I gave the analogy on the GDX, I said, look what's happening on the GDX through here. I said what? I said we're getting now this lower low, but we're actually getting the roll over. See, we're getting this roll over. What happened with the S&P 500? Did we get the roll over? No. It just went straight up, didn't it? Notice how it just gapped straight up and went straight up like that. So that's the differences between, and it's not really a pattern, right? It's just how It's just how the markets work, right? We flow lower high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Oh, look, lower high, lower low. Oh, look, now it's starting to make a lower high. We're breaking down. So do you see what I'm saying? It's like, it's not me. It's like, it's not about me being right or wrong with the markets. It's never about that. Okay. So, and so, yeah, one of the videos I did say that if we do get the lower high on the S&P and Dow Jones, then we're probably likely to roll over. Did we get that? No. So therefore, you wouldn't expect it to drop. Okay. Now, granted, yes, when it comes to the S&P 500 Dow Jones, I have been wrong when that, right? I really thought that we'd probably, and I've been saying rounding top and stuff like that, and I really thought that we would have got a bit of a drop. And that just comes to show, right? The mistakes that I've made, even with the Dow Jones and S&P, is just to continue throwing some of my thoughts at the markets instead of saying, you know what, market, you tell me what's going on. And so that's the reason why I came out yesterday and I said the mining stocks are rolling over. And you guys know, right? For the last few weeks, I've been saying, guys, don't be getting it now. Wait for some form of a pullback because we're probably likely to get that. And that's what we're getting here right now. And as I said before, like right now, looking at the mining stocks, we're probably likely to be heading down towards this. I have a target around the $29 level, probably even just a bit higher than that. So I'm probably even around that, say, $30 level is probably where we're likely to get to on a short-term basis there, on the GDX there. Now, I also referred into yesterday's video about the silver market, right? Now, I went back and looked at the silver market. See how this is the silver chart here? So the silver chart here, what? We had this high, we had this sort of low point through here. We had this high point. Notice how we had this lower low and a point through here. Now, what is the differences between this and the S&P 500 I said before? What? Say it with me. The market actually started to roll over, didn't it? It actually confirmed a lower high. Did the Dow Jones do that? No. What did it do? It came down, made a lower low, ran up. Did we actually get the rollover starting first? No, right? So it negated it and we popped back up to here. We actually made a higher high on the Dow. See how that works? So when we're looking at the markets, it's so important to say, okay, no, the market didn't roll over. The market actually didn't even give us a lower high. Where on the then I referred to the GDX to what the silver was doing. You'll notice how we actually had silver, right? What did it do? It confirmed the lower high. As soon as we actually broke this lower low through here. Now I don't think the GDX is going to do what happened here with silver. But notice how when silver did make what? A lower low. So it made a lower low and then it confirmed. See how it made a lower high? Once again, guys, in this situation, what did the Dow Jones do? It ran up and then gapped up, right? And then made a higher high. Is that a lower high? No, the market didn't give us a lower high. And this is where, guys, trading the market is like dealing with a woman, right? And I'm not being whatever towards women here, right? But you women know what I'm talking about, right? Like 1 minute you're so happy and everything looks good, and then the next minute you change your mind. With the markets, right, we need to just wait for, okay, is the market actually starting to roll over? Is it actually giving us that lower high? If not, therefore, when I did that pattern about a month ago now, or a few weeks ago, a month ago, that I'm saying, if we do get that lower high, then watch for this. We didn't actually get that, so the if scenario didn't happen, so the video was negated. So as you can see here, right, and again, that was the mistakes that I made during this whole time by looking at the markets, right? But the whole thing is just to continue to read what the market is telling us right now, and then as it unfolds, then we need to fold with it, right? Because like for example here, right? Just say for example the market comes down, it comes up, it creates this lower high and rolls over. Does that mean it's going to run all the way down to this low here? No, right? But that's the reason why what we're looking for is we're looking for a lower high breaking past previous lows, and then we're likely to start to head down. But there's no guarantees here, right? And this is where people get so stuck with trading, because if that happens, then what could also happen is this, right? And then a completely reverse. So this is where people like completely just they get so tied up, like, oh my goodness, I thought this market was going to go down. There's no certainties, guys. If you're looking for a certainty, don't be getting involved with the markets, because the only certain thing is you're going to lose your money again and again and again and again. yes, you just got to accept, right? Okay, I'm getting this trade, and there could be losing. There could be that there, all right? So right now, by looking at the GDX, that's what I see what's happening through there. Same, and now with the GDXJ, we're actually starting to break. We had made a bit of a double top formation here, and now see how the market is telling us what? The market is telling us it's starting to end. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, double top, rolling over. Notice how the market is telling us we're starting to pause here a little bit. Now, it doesn't mean we're going to get that on the GDXJ, right? But it's saying, hang on, so it's slowing down right now, and we're in this triangle pattern. SIL is actually still in a very, very, very nice upward trend. So there's no real big bearishness on the silver junior miners. Let me just finish up there. So once again, guys, we're still in a very, very, very big upward trend. So we may get a little bit more of a downward movement, but we're still in a very big upward trend here. So this could just be a continuation move. And same with this, same with the SIL, but the SIL itself, what? Double top, and now we're breaking out. So if this double top was in the play, we would measure from the high of the channel down to the low of the channel, which is that point there. And if we break the low of the channel, then we measure from the high of this double top down to the low of this double top. We project that down. And then we see this point through here, right? So that tells me that on a short-term basis, the SIL, we should be getting down to roughly around, say, that $30 level there. But we need to break this level through here. We are breaking down out of this level through here. So I would say, the SIL is on its way down to around the $30 level there on a short-term basis. Also, I also did a video yesterday saying breakout coming. And as you can see here, what's happened here with gold. So I'm expecting to see gold probably see a quite a decent move down. We're probably likely to see a nice strong selling move now with gold. We've been going through here. We've been flattening out for a long time. So I'm expecting I'm expecting a decent move out of gold, guys. Gold has been very, very, very strong for quite some time. And now we're squeezed up in this triangle pattern. We got what? We had this high. Now we got what? Say it with me. A confirmed lower high. Breaking past these lows with a very strong breakdown bar. Where it is right now anyway. And so therefore, guys, again, don't be too surprised if we started seeing this type of action coming into to gold moving forward there. So that's what I'm seeing through there, guys. It's starting to happen right now. And all we need to do, guys, is to continue flow with the markets. That's for trading purposes, okay? If you're investing long-term in gold, then a pullback here is something that you should just expect, okay? If you want to hold something long-term and try to capture big profits and big trends come with nice pullbacks, okay? And so that's where, if you can't handle that, then you shouldn't be holding something long-term. The worst thing that you can do is buy something based on a long-term basis. I mean, I'm going to hold gold for 3, 4, 5 years because it's going to be amazing. Oh my goodness, the inflation, all this sort of stuff, right? Your theory. And then suddenly the market pulls, I'm holding this for 5 years. And then suddenly the market pulls back for a week and you start to freak out. See how that's so incongruent. Your trading the way you approach these markets is the way that you should have your management rules. You don't get in now and say, oh my goodness, it's pulling back against me. It's been down for a week. Maybe I got it wrong. It's like, that's why I always say, guys, right? If you've been listening to me for the last month, I've been saying, no, the highest probability is to buy the dip on any market. If you're looking to get in on that there. So when I say buy the dip in an overall big bull trend, okay? So gold's in a big bull trend. So if we got a big dip down to sort of, 1600 or whatever, then, then that would be, that would be a good dip, right? Same with GDX and so on and so forth. So there we go, guys. Have an amazing day, and I'll speak to you soon. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Go the Markets by the Balls trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training that goes for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get rich quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first thing in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go to that right now, and I'll see you on the next page.